Thanks for joining us. I'm Marlin Bohling with you, and I'm joined in studio by Chris Swift of Swift Trading in Nashville. He comes in each Monday at this time. Always good to visit with you,
Good morning. Yes, sir.
Looking very dapper today.
Thank you.
I hope you had a good weekend.
Oh, fantastic. Sure did.
The weather in a lot of areas was just prime for harvesting as we're kind of putting the finishing touches on harvest in a lot of areas. In this part of the country, a lot of double crop wheat goes in right in behind.
Right over the corn
or
soybeans. Yep.
Yeah, so a lot of that is being done right now. And it's a very active time, that's for sure. So stay safe out there. Now, I want to take a look at our grain trade. Our quotes are provided by bar chart. We opened up a little weaker, and we're staying that way. December corn still down 4 1/4. We're now at $6.80 per bushel. And on the soybean trade, well, November is down 25.5. And Chris, I understand most of the volume now has moved out into January. It's also 25.5 lower, but it's almost a dime higher than the November is. So it's at 13.79 1/4. It's only, about a penny and a half from our low of the day there. So keep an eye on that one. Now let's move on to the wheat. In Chicago, December is down 7 1/4. We're now at 8.43.5 per bushel. Kansas City wheat has had some trouble here this morning as well. December currently 6 3/4 lower. It's now trading at 9.41.5. And let's go to the spring wheat trade in Minneapolis. We had December down a nickel at 9.56.5. So no matter where you look in the grain side, the crop market side here, a weaker tone today.
A little softer. Yeah.
What do you read into that?
I think it's mostly basis than anything. If we look at basis, we know basis is a mathematical formula of cash minus futures always, and that's why we get plus and minus basis. So with the Mississippi River, in very bad shape, and some of the other river systems, the railroad strikes, it all boils down to a possibility that basis could just go wild. If I'm needing to sell it, nobody wants it because they can't move it further down the line. If somebody needs it, then they might have to pay excessive transportation costs to get there, because our trucking situation right now is about our only way to move anything.
Also, wanted to touch on the cotton market as well here this morning. And cotton has really just had an abysmal last month or so, and now we're down 161 points again, with December cotton now quoted at $77.43 per pound. Oh my gosh, and here it was up around, 120 just like a month or two ago. So crazy how things change. I did note where the Dow had a very strong open this morning. We had the December, well, at that time when I looked at it, it was up about 400 points. It's kind of cooling its jets right now. We're up 218 at 31,341 right now. Does that mean much to you as far as our ag commodities, as far as investor money flow right now? Or
not this week particularly, but next week and the next will be phenomenal, because you'll have two events, one back to back. You'll have the next FOMC meeting, in which the Fed will most likely raise rates again. We don't know by how much. And then just afterwards, we'll have the midterm elections. So those two will probably, if you were thinking about trading into something, this week is probably going to be spent trying to position yourself for those two events.
Well, what about the fact that we're going to be coming up toward the end of the month here? Does that bring in some kind of odd trading patterns as well?
It might, but we're at the first of the fourth quarter, so probably not, quarterly, nothing really there. And for the end of the month, I can't think of anything. Again, basis is going to be really, really wild, and that's something that we'll just have to take day for day, because it will change day in, day out. As maybe this system that Tim says coming in, maybe that gives us enough water to raise it a couple of inches and float more barges down the river.
All right. Well, and of course, we heard the reports over the weekend that tensions continue to be ratcheted up around Ukraine, and Russian officials have been contacting leaders all over the globe in key countries, talking about things that they think are happening, and of course, a lot of contrary opinions flying around right now. But boy, if that would escalate a great deal, that could have some big implications on our ag trade here.
There's no doubt, and those are very hard to hedge against or even actually, foresee, because you really never know what they're going to do. But hopefully, cooler minds will prevail. So
hope so. Yep. All right. We'll pause right here, and then we'll talk with Chris Swift about the cattle on feed report and what lies beyond now when we come back. Well, we're back with Chris Swift. Now, let's take a look at our livestock trade, and our quotes are provided by bar chart here on the live cattle. First, Well, look at this. We have the most strength here. Chris, live cattle showing the strength in the nearby contracts with December up $1.15. We're at 153.57 right now. So we are within a dime of our high of the day, and we're off of our earlier low this morning by, check this out, $1.30 already. That's quite a bounce. At one point, we must have been a little bit lower. February live cattle now 82 cents higher at 156.37. So strong on the front end. Usually that's a friendly sign for bullish markets, right?
Yeah, absolutely.
The bull always leads by the front. Okay, on the feeders, let's take a look at November. We are up $1.07. We're at 179.42, and that's a nickel from its high of the day. January up 167 at 182.05, so pretty strong there. In fact, you have everything a dollar higher or more from November all the way out through April of next year. So strong performance overall in this cattle complex. Now on lean hogs. They are going the other way. December down, excuse me, down 75 at 88.37, and February down 40 at 90.15 right now. So lower. Now here, the biggest loss would be way out in May. It's down 97 cents. Maybe not that much volume out there. So what do you see here? The cattle market strong, the lean hog market kind of fading a little bit today. Lean hogs, were they a little overbought, do you think?
Well, they could be. You know, they put on close to $8, $9 over the last several days, so they have been on a tear trying to converge that basis again. The cattle market, nothing much has changed on it with the cattle on feed numbers. Similarly, the same aspect of what's been going on, and that is we're killing our front end supply, our back end supplies right now. We noted that packing capacity has increased significantly through greater employment, so it's going to be really hard to tax that packing capacity with the number of cattle we have. So you might see the fat cattle market continue to ease a little bit higher. Some of these are new contract highs in the fat cattle market. The feeder cattle market's where it'll still be the most impacted with those outside input costs. So it may not be as quick, you know, to move higher as what the fat cattle market is, because that's a direct consumer demand. The feeder cattle market, you got to have a lot of decisions to be made whether you want to buy that and then buy all the input costs as well.
Are the packing plant speeds back up to where they were pre-pandemic?
They are. We've been killing 660, 662 every week now, so there's no seemingly hitches to it whatsoever. Nobody's having to work, you know, massive overtimes or anything. So it's about as, you know, running as smoothly as it ever has that I can see.
All right. Well, thanks for coming in.
Always a pleasure, Mark.
Great information.
Yes, sir.
As always, Chris Swift of Swift Trading here in Nashville. Janet, it's all yours.